pleasure to be here at the Benzinga Cannabis event. Congratulations to Jason and the crew. This is an exciting day. And I have the pleasure to lead a investment discussion with a group of investors, frankly, who really, to probably most people in this room, don't need much introduction. It's a very experienced group of folks in the cannabis space that, in a couple of years has become extremely sophisticated, and I would argue that is how this group approaches their job. So without further ado, let me introduce our panel. Sean Stiefel from AV Capital, Tahira Rematullah from MTech Acquisition Corp, Gene Sullivan from ArcView, and Danny Moses of Moses Ventures. I'm gonna go podium for a second before I jump to CG. Hold on. We got it. Because this event is being run like a Swiss watch and everything, it's 9:02 right now, isn't it? So we have 30 minutes to talk about the world of investment, and we're obviously not going to do that justice. Especially, I think, in light of really all the trends that we're talking about. I'm on a show called Fast Money, so this will certainly be uber fast cannabis. And so just quickly to intro the panel, it's probably about 150 days since I sat here on a Benzinga stage in Toronto in August of 2018, 2 days after the Constellation deal. Probably everybody knows where they were when. It's one of those moments. And so much has changed, and yet so much is really the same. And I think part of what we want to talk about for 2019, and this panel is really all about, let's talk about execution, let's talk about who's doing that, and let's talk about the trends for tomorrow, not yesterday. But quickly, it's pretty clear if you think about what's happened for this sector. What's the same? Clearly, volatility for both the public and the private markets, certainly the public markets, is just where we were. And in fact, obviously, in market-weighted terms, if you look at where this industry is from Jan 2018 to Jan 2019, if you looked at a weighted market cap and you looked at an ETF, which is not necessarily how people are doing it here, but the asset class is down 15% year over year, and yet think of all that has happened in terms of legislation and, more importantly, execution. So think of what's different. Obviously, I think the most important thing that's different is 2018 multiples are not the 2019 projections that so many people have hockey sticked. So it's really about execution this year, and I think that's the bar that all of us investors are holding people to. I mean, I think if you think about what's different in terms of the globe, what's different in terms of no Pete Sessions, no Jeff Sessions. I mean, there's a lot of great things. It's a very different conversation, and I think that's the conversation we want to have today. So the group's already been warned. By the way, each one of these panelists, like myself, could probably spend this entire time talking about what they do. So for efficiency and hopefully to cover as much ground, we're going to kind of keep this lean and mean, and they all know they're going to be knocked back into shape if they start waxing on in a monologue. Let's quickly talk about the market, and that can be, Sean, that can be the market for public companies or private companies. But give me your sense of a market, and this is, again, what's different. It's a cannabis market that's finally experienced a global bear market going on around it. Capital used to be free. It was indiscriminate. Talk to me about that.
I think you have to look at valuations kind of across the board here. And what you had is, yes, the market is down 15% year over year, but look at sort of where we are in terms of global public market cap. There's about 100 billion of global public market cap today versus January 2017. If there was 3 billion, that would have been a lot. So you look at the capital inflows, you look at the velocity of capital, and that's sort of what's happened here is just too much, too fast, and it's, in our opinion, a healthy correction.
And Tahira, you're trading in a publicly listed vehicle. Are the public capital markets friend or foe right now? They're obviously friending in terms of the core way you are structured, but there's a lot of people out there that bought into this sector at the top, have been beaten and churned around, and arguably are kind of cynical about the public markets.
Yeah, I mean, I think that it's a little bit of a foe right now because everybody is being judged kind of on the same playing field as opposed to kind of looking at from a fundamental perspective, how each business is doing, what's the health of that business, what vertical within cannabis is that business operating in. By and large, most of the public companies right now are cultivators. So LPs in Canada, U.S. multi-state operators, and so the company that I'm with is an ancillary business, but we're all being measured the same, which is a little bit difficult because there's a different analysis that happens with all of those types of businesses. And I think as the market continues to mature, we have quarterly earnings that people are held accountable for. We'll start seeing more corrections and actually judging those against other industries like tech, like CPG, that have a much longer history that we can actually measure against.
Gene, are you holding companies to a different public or private market standard in today's market than you were 12 months ago? On some level, I expect you to say no, because you've been doing this a long time and you've seen bubbles, and you're a veteran of the tech industry and you've seen almost everything. But you tell me how different 2019 appears than 18.
There's certainly some value of going through multiple cycles, because we know how to ride through them.
Yeah.
And it's important to understand the differences of the dynamics. It's also Darwinian. Those companies, those business owners and entrepreneurs of Wing know how to scale companies. And guess what? That's changing. We're seeing that kind of quality happen. That's important. Those are the kinds of companies that are going to win. And what's fun for me, I've been doing these ancillary businesses for many years, more than 30 years. Hey, it's a lot more fun to be doing it in cannabis. So that's pretty exciting.
Danny, we've often talked about the public-private market kind of arbitrage in terms of what we've seen. Obviously, you can make an argument that public markets got so cheap relative basis in the end of December that actually some of that arb went away, but what do you see? And again, you're investing all over the place. You've been doing this a long time. You've been doing it in other markets as well. So what's more exciting, public or private right now?
I think they're both exciting. I think just to take a step back, if you had told everyone in this room to read that much market cap outstanding a year ago, no one would have believed it. So yeah. I feel like in cannabis it's 2 steps forward, 1 step back, recalibrate and reset kind of. But private markets give you a much longer duration than you have in public. I think as a public CEO, I'm not one of them though, but you feel pressure when your stock's not doing well, so forth, and you want to, this is a long, winding process of what's going to happen. Regulation, you're getting bumps along the road, and being private gives you the ability to navigate that through without that extra pressure. And we didn't even mention how much money's been raised privately. Forget about the public market cap.
Yeah.
There's a lot of private companies. Some of those will fail, some of those will succeed, some of those will be acquired. But I think you got to dual path it. I think find the right company in the private space that you think can join in the public markets. I think that's a great strategy.
So that's interesting. So Sean, a lot of companies will now come to you and say, RTO is a bad word. I'm not doing that. That's not what we want to do. We're actually going to wait for a proper big board listing. And first of all, are you buying that? And let's face it, the RTOs have been rewarding and they've been frustrating for people that are in and locked up, and yet we're early to the story.
Yeah, I think we entered a bit of a tailspin for the last sort of Q4 of 2018 was a disaster for capital markets and cannabis. For us, what that means is when you do this private public arbitrage, when you invest in a private company, you no longer have this quick flip up 2x, 3x, and now you actually have to really do your homework and get your hands dirty with these companies. I think that this is better for the industry because you're actually driving business value as opposed to stock.
Isn't that a company that's more focused on the road? I mean, on some level, not focused on the capital markets process. And granted, capital markets have been very important. Well, that's not, it's usually my phone that's going off on TV. And in fact, by the way, I may be the one that lost their phone. So, and if anybody's got a set of readers, by the way, that would also be helpful. We can walk them up at any time. But again, what do you think about that?
I think that the idea today that you can buy something private and very quickly flip it publicly, that's gone. For 2 reasons. Not only are these deals not performing, but there's no liquidity. So you look at sort of the 31 last deals, I believe 30 are trading below issue.
Right.
And very few of them, if you wanted to sell, say, $1 million, which is an institutional number, very few could you sell $1 million of stock in a day.
Right.
So that's created a huge problem. But what that means is the private market's now more interesting because you can actually get your hands dirty and you're spending time building a business as opposed to kind of artificial financial engineering.
Tahira, It's maybe, we've now had maybe one or two high-profile corporate governance blow-ups, or at least a re-examination of what corporate governance is. I am sure everybody on this panel not only has always cared about corporate governance, but probably was doing more work than other folks on this. Talk about this, and we don't need to name names. Let's just talk about, is the industry held to a better standard today, or do you actually think it's still a massive problem?
So I think that there are going to be more problems to come because of the lack of corporate governance, and so those things are now being uncovered. I mean, yes, there have been a handful. I think there will be more simply because these structures, it was fascinating. So kind of to Sean's point, you look at where some of the businesses are trading now compared to where they IPO'd. I mean, this was just artificial inflation. There were a lot of interesting things kind of going on behind the scenes, and I mean, I think appropriately they should come to light. However, for other businesses now coming into the market, that there's a new bar, and that's a good thing because we need businesses that are operating at that level. Corporate governance is a huge concern. The fact that there was kind of a lack of it before, I think that it's a good thing that there's a correction that's going to happen, but I think there's going to be a little bit more pain.
Yeah, well, I mean, it's, again, whether it's Japan in the 80s when capital was free, Japan is still working through the cancer of the credit bubble today, and having being overly capitalized without a plan, frankly, is as dangerous as being undercapitalized. And so, Jeannie, remind us of your corporate governance checklist. What are you doing now, and maybe is there anything you're doing differently today than you were a year ago in this sector?
Well, eyes wide open, certainly. And again, as I said a second ago, it's the business owners and entrepreneurs who are mindful of that, who can understand that. That's what you look for.
Yeah.
And this is where I love to remind audiences, this is just like tech 30 years ago, where newbie entrepreneurs and business owners who didn't understand these things, unformed business models, unformed distribution topologies. And so those kinds of executives, entrepreneurs, and business owners today, they have to learn something from this road. And so I think that's what's critical. And those seasoned investors, those of us who are there, know how to spot that. That's what's critical. It's just really so hard, such a hard business anyway, than to have somebody who doesn't understand those things knocks them out of the box, in my view.
Well, it does, but Danny, and I know, and this group knows that you've never been cynical about anything in your life. But on some level, in the cannabis sector, you have to look beyond some of the things that naturally, if you were sitting in front of a due diligence committee, or if you were the due diligence committee in a high-grade sector, or in a, for a state pension fund reviewing a hedge fund or a capital markets investment, it's a very different guideline. And I think you would admit you're willing to overlook some stuff that would never pass your sniff test. We've talked about some things like this. So how do you decide where I'm willing to look past the gate and say, all right, this doesn't smell great, but you know what? I think there's a huge opportunity, and I've got a gut about this management team.
I guess it depends on your role in the company, whether you have a board seat or whether you're passive or not. But if I didn't think anyone had the integrity, I would not invest. I just want to say that right now in terms of who was leading the company, because you don't want to be involved with someone who may be doing something illegal, so forth.
Yeah.
That being said, the macro is so strong in the space that you're going to have to take risks and have faith that maybe the decent business plan, it's not great, but it's good enough, macro's going to pick it up and take it. And I think a lot of these companies were forced into going public because of the lack of capital that was out there for them. And so it's a necessary evil, if you want to say. So a lot of these structures that weren't set up right, a lot of the board, a lot of the compliance stuff that wasn't set up right, you kind of got to put the cart before the horse and take that chance, kind of what you're talking about, Tim. So I think you have to have a vision and hope the company's in the right space, and there's enough of a powerful wave to carry it through any of that mess.
So if I'm hearing you, though, you're saying you may be attaching a different set of standards for this industry than you might have looking at.
Well, you're starting
bank balance sheets
a
decade ago.
starting on a business that's still not legal technically, so you're already throwing that out. So you're already going in eyes wide open. So with that as a backdrop, everything else is rosy. So it's pretty easy after that. But yeah, I mean, you have to have a leap of faith here for sure, and so you're riding the right horse.
But there's such critical issues, Tim.
Yeah.
Kind of back to the checklist. You look at a company and say, well, is this 280E compliant? And if there's a blank stare, that's a scary metric, right?
Yeah.
And all the issues, some states are still there's issues about residency, profit, nonprofit, how these entities are set up.
Right.
Are the receipts and bookkeeping all kept in a shoebox? You know, the kinds of clarity around running businesses at this scale, I think is critical.
Yeah, I mean, that sounds like governance 101, but the point is that a lot of the companies in the sector have either grown up in the sector and therefore take compliance as gospel, and maybe even have better compliance than companies in illegal sectors. And then other companies that grew up actually in the gray, black market, whatever you want to call it, and actually have, Sean, I mean, they may actually find it frustrating to have an outside investor say, hey, look, we're on board, but I see something you're doing, and I don't love what you're doing, or I would suggest you do it differently.
I think it's very important right now as an investor to have as many controls in place as possible. More so than ever, we're very focused as a fund on taking board seats, because you need to not only manage the corporate governance, but now that liquidity in even the public markets is in question, you need to start really managing your exit out of that investment, even if it's 3 or 4 years down the line. I think in general, what you've seen now is because the stocks have performed so badly, you saw now with Aphria and the MedMen lawsuit, people, when they lose money, they sue. And that uncovers a lot of hair that this industry has. And so I think the more and more that these stocks kind of trend towards zero, or individual stocks trend towards zero, you're going to hear more and more horror stories that anecdotally we all kind of have heard in this industry that are going to come out in the court system.
Yeah, and there'll probably be more of it to hear. Sean talked about they actively seek board seats. Is that a strategy you guys employ? But I would also think that on some level, that's very time consuming. And it's nothing to distract you, Sean, but I mean, this takes time out of your day. So Tara, how do you juggle that? Because again, you are very involved in the companies you invest in.
Yeah, through Hyperventures, we have 9 portfolio companies, and there's very active roles in a lot of those companies, and they're all at different stages. But it's a very different, I think, investment process because you have to be hands-on. I think to be a passive investor in this space is very dangerous at this point. But it also depends on what your goals are. Our goal is to invest in early-stage companies and help them grow, offer them resources, connect them with different groups. But it's essentially you're working for all these companies kind of for free.
Yeah.
Because you've invested in them and you're going and trying to do all this other stuff. The management teams vary. Some of them are really strong and they have the capabilities, and others, you need to fill gaps. I've acted as a CFO in one company and a COO in another. But it's worth it to be able to transition them through to a better state. And so I think a lot of investors take that approach, and energy, even pretty hands-on.
It's critical.
Well, so by the way, my wife will tell you I believe in positive reinforcement. So tell me what I'm doing pretty well as opposed to what I'm not doing well. This group is doing fantastic about flying around on topics, and we're covering a lot of ground, so we're going to keep moving. But bravo. So Gene, let's talk about now. Let's talk about Farm Bill. Let's talk about the euphoria around what suddenly seems to be on everybody's mind. And suddenly, how did this become an overnight sensation when we knew this was happening? So answer this question any way you want. Hemp, euphoria, too much, not enough. Are you excited?
Hemp and its derivatives, it's going to be bigger than what we call the marijuana stuff. And I am so proud to say that we, meaning a few of us, Canatech, Parkview, and a few other fabulous people, some in this room, we went to Asia this year and did the first ever cannabis conference in Asia, in Hong Kong. And then we went to the hemp fields in China, went to Shenzhen, Shanghai. This was a thrill. And you heard from Giada, they are the largest producer of hemp, China is. And so this is pretty interesting, 90%. This is fantastic, and I hope you tuned in on Monday. Pretty exciting. You saw, if you paid attention, to where some of that Constellation Brands money is going. They just announced $100 to $150 million investment in the state of New York for big hemp production.
But Gene, was that worth, and I know you're not looking at the markets tick by tick, but is that worth 10% in terms of market cap, that announcement? Because that's, you can argue that that's what happened.
Come on, Jim and people, use your imagination. Talk about wash, rinse, and repeat. Just think about the scale that's going to happen from that. We got a few more states, right? So just, I can see the pattern. And isn't that pretty exciting? So it's happening. I mean, this is brilliant what Canopy has done with this constellation.
Danny, is it brilliant? And I'm not up on your grill right now. I'm curious if you think the same thing.
Well, I think if you took the cannabis template of years ago, people rushing in that just wanted to be a grower, I think now take everything you've learned about vertically integrating and apply it to hemp. It'll be a much smarter, much more, efficient process. Obviously I won't go through the economics of it, but I think it's an exciting space. I think people want to procure enough supply that they feel like they can have a first mover advantage, so I can see why someone would do that. Plus, if they're paying in stock or cash, it's a big difference if they think the stock's somewhat inflated. But I mentioned it yesterday, I think the wellness aspect of hemp CBD is the most exciting part of it. I mean, it works in epilepsy. So how many things do you hear about that actually work scientifically? So I'm excited more about the wellness application for it. I'm excited that 80 years of bad laws are being turned over.
Yeah.
I think there's a lot of other positive things, and we don't have, that's a whole other obsession of society. But anyway, I think it's exciting, and I think we'll see a lot of deals. And yes, people are overpaying, but they're looking at the bigger picture.
Yeah, by the way, I mean, there's not enough time to get into this. We've cut you folks off with questions, by the way. We're insulted we only have 30 minutes, by the way. So, Sean, hemp versus cannabis in your portfolio, what's the split? What do you think?
We obviously love the CBD market. One of our investments, MaryMed, just made a large investment in Jetcana, which we think is one of the crown jewel hemp assets in the U.S. And that's, for us, we want to express that investment in a big way. Likewise, I think the differentiation now is post-Farm Bill. This is like any other CPG, but the analogy is actually, it's regulated as a drug, but so is sunscreen. And so if you think about how sunscreen is sold, it's really, there's no barriers to it being sold. You can walk into your CVS and buy it. And so we think now with sort of a blanket, this is okay, you're going to see more and more hemp products in every single store you go into. We're investors in Lord Jones. Lord Jones was in Sephora 3 months ago.
Yep.
Things are happening very, very quickly, and a lot of the business models now of these multi-state operators or these sort of Canadian licensed producers, how do I get into Target? How do I get into Walgreens? This is a very different conversation than a year ago.
Yeah, I mean, it's truly the one that, when I have to get out there on CNBC, and I was like, who's next in? It's kind of an idiotic conversation, by the way, off the record. But the bottom line is, you can now talk in real terms about Amazon. You can now talk in real terms about massive distribution. So ultimately, you have a dynamic where you guys are looking kind of off the, kind of the ancillary trail. I mean, does this give you, is this now like, wow, we are in a much better place to be allocating capital right now towards this sector, this subsector?
Yeah, absolutely. I mean, I think if you look at your more traditional distribution channels, which were completely off limits even 2 years ago, right? For a lot of the companies that we work with and a lot of the products that you see in the space, you were really confined to just going to a dispensary. That's the only way, even with CBD, right? Because it sat in this gray area as far as legislation. And now, I mean, I'm based in New York, I walk down the street and every store, coffee shop, pharmacy, bodega on the corner has a CBD sign.
How many shots, hits, doses of hemp CBD taken a day?
Oh, I just take them all the way.
Just all day.
Yeah, so I
Wait a minute.
test this out.
Wait a minute.
And it's also amazing to see, to get a latte that has a little bit of CBD in it, it's like they charge you $5 more. And I'm like, this is New York. Your coffee's already $5, and now it's $10. People like it's a miracle drug, right? But also thinking about global, right? We were very much, particularly in the U.S., you were confined to your state, and sometimes in your state, just your region of that state. And now we're thinking in much broader terms. We're thinking about Europe. We're thinking about Asia. We're thinking about Africa, right? And all of these products, you can now send them all over the world. So I think it's a huge opportunity to also pursue traditional distribution paths and companies. There's going to be a lot more alignment, I think, consolidation there.
And amazing, we act like we didn't know that the Farm Bill was coming down the pike. I'm not saying we and the collective we, but the we somewhere. I mean, it's as if this was a surprise. So let's move on from that. Let's talk about Gene. You've already talked about hemp. I'm moving you down. We've got 7 minutes left. We've got 2 topics. The first is, you touched on 280E. So let's talk about the legislative environment. Again, next up on the docket, what should be a catalyst for this sector? And States Act certainly in, whatever it contains. And it sounds almost like it's the cure-all, right? It's a panacea for everything that's wrong with the commercial environment. You're shaking your head, so go ahead.
It's completely crazy. Listen, women wouldn't have come up with these rules, I'll tell you that. Come on, you know, get with it, everyone. It's just, most of us in this room have been in many cultivators and dispensaries. The cash is stacked aside. What's with that? Let's fix them. Give us banks. I got to go to lobby days for NCIA this past year. I've never done that. Oh my God, I can see why nothing's happened, you know, down there. Oh, we didn't say legalize us. We said, give us banking. This is the dumbest thing going, that we don't have real banks to handle these problems. So that's one of the big deals. Let's fix that thing. And then I know, and you do too, come on. You know who, I don't say his name.
Say it.
You know, I do not
Say
say
it.
his name.
Come on.
It begins with, you know, it's what was it, individual number one. He knows this can happen. It's gonna get pulled off the Schedule 1. There is no doubt in my mind, or any of us who follow this hour by hour. And so that's gonna really blow things open. Let's get banking done first, and it's gonna come off Schedule 1. And then I believe, and I think many of us do believe this, the states will put up guardrails. Because New York's not, even though the law of comparative advantage will kick in, that's why New York doesn't grow oranges, that we will put up guardrails and want to keep the will tax creation that's happening. And so some of the states will make their own deals,
Right.
just like the liquor law.
No, and I
so
think
that's the future.
that's the key to the States Act. It's truly let states govern themselves. So Danny, how are you looking at States Act or anything, and are you investing into that? In other words, are you finding companies that you think, all right, I think this is going to be the component of this bill, and these guys tomorrow are going to look like geniuses?
I think the wake-up moment, Tim, as you mentioned, where you standing during the Constellation deal, was the banks were already doing business where they can, right? If there's a large M&A fee or an advisory fee, they'll take it. Yeah, it's cannabis, oh, they're buying something in Canada, it doesn't count. Still representing cannabis. So that, complete hypocrisy. I think the biggest thing to the States Act, and where I put my money kind of, is on the recap of all the U.S. multi-state operators that can occur. It's not just them, it's just imagine being able to issue debt, that banks can issue debt and trade debt and settle debt and recap these companies and lower their cost of capital from the mid-teens to the high single digits. That is transformative, and that's the biggest difference in kind of the debt bubble, you know, the pets.com and kind of where we are now is there's no debt on most of these companies, and that's a huge positive. And I think people look at equity valuations, just take the enterprise value of what it actually could be and lower the cost of capital.
They're pretty much the same.
Yeah, I mean, so I'm most excited with what the States
So by the way, Danny is transitioning into his big idea, because we have 3 minutes left, and I'm on a tight ship here, and we got one. No, but this is great, because so Danny, tell us, this sounds like this is where you're passionate about what's coming down the pipe.
Yeah, I think we've seen, and Sean has seen this, he's done deals where you're getting great terms as a lender right now in the space, companies are forced to take it. You're getting warrant coverage, you're getting 15 to 18% money. I think there's going to be a high yield revolution in this space. There's going to be billions of dollars issued and traded on Wall Street within the next 12 to 24 months. Believe me, as soon as Wall Street smells the money, they can kind of hide behind it legally. Maybe it starts on hemp farms because it's now legal. Maybe that's where the debt starts to get issued. But I think you'll see a recap of the entire industry. So I think that is probably the most exciting, transformative thing that's going to happen.
And every company, let's face it, why do you want to give up equity when in fact, you know, your business is very solid? And you know, yeah, there's royalty, you know, dynamics, top line partnerships, but the bottom line is debt is actually very healthy right now. Sean, your big idea, however you want to address this question, it's a bit of a cliche, but what, you know.
I think three big themes this year. I think what Daniel alluded to is a re-rate of multi-state operators. I think valuations came into this year too low in a year where we're likely to get a version of the States Act. You should not have the top assets in what I think, or we all think, is the hottest sector in the world right now, trading at single-digit 19 EBITDA. It just doesn't make any sense. You're going to re-rate there. I think this is the year where my mother, my sister, my friends are all going to be able to name brands. This is a big breakout year for brands.
I bet your mom can name brands right now.
Maybe. And then I think we're going to have a really interesting dynamic with social equity. You're going to start seeing more and more social equity plays, very prominent, celebrity-backed, politician-backed social equity movements taking place across the country. And if we get cannabis reform via criminal justice reform, all of that is going to come to a head much sooner.
People are much more aware on that, which is fantastic. Tahira.
So I completely agree with the social equity component, which I think is a huge factor that has been overlooked in this space for quite some time. People in the background have been advocating for it, but not enough has happened. And I think that's going to shift, or at least I hope that shifts. I know that Sean can share mindset around that. The second piece I think is consolidation. We're already starting to see a lot of M&A consolidation. It makes sense because everything has been so fragmented for so long. And companies are starting to see where they have logical alliances that make both companies better, make the economies of scale, everything's starting to make sense, whereas everybody was kind of shouldering the burden by themselves before. So I think consolidation is going to be a big theme for 2019 and 2020.
Fascinating. Gene.
Keying off of what Tahira just said about consolidation, that number is of over 350 M&A transactions, that's public and private, 2018 versus half of that in 2017. And guess where a lot of that is happening? In that area that I mentioned, which is the ancillary businesses. Smart business owners and entrepreneurs who are now building these kinds of sensors, data platforms, critical testing platforms, genomics. Those are the kinds of private companies that have so much value and value creation over time. Because guess what? If you are listening hard where the money flows out, they're going into those MSOs, those retailers, and those cultivators. Those business owners and license owners need these ancillary businesses to create better yields, better companies, understand what they're doing, have the right testing kind of platforms, the extraction technologies, which are really changing rapidly. So I believe that's where a lot of value is.
Well, and you want to talk about a wall of money that's going to come into a sector. I mean, that's where the wall is, and, because clearly when you get into biopharma, genomes, there's so much R&D behind it, but there's so much institutional intellectual capital behind. Some of the most sophisticated analysts in the world are doing work in those sectors right now and want to be in the sector. We always hear, and by the way, unfortunately, sometimes cannabis gets compared to crypto. And so crypto guys, by the way, and they may be some of the same people. I don't mean to us and them. But the reality is, it's always this talk of when's the institutional capital coming in, and there's some permanent barriers to institutional capital right now that I'm not sure are going to change, but that's another conference. In cannabis, there's no question about where this wall of capital is coming. And until we get kicked off the stage, by the way, we're going to keep going. So Sean, what do you think about that? And talk to me about the types of investors that are knocking on your door.
Yeah, I think this is the year you're going to see institutions really willing to take the leap. We have a few institutions as investors in our fund, and we've talked to the largest institutions on earth about investing in cannabis. Obviously, a sovereign wealth fund from a Muslim country is probably not ready to do it just yet, but they're definitely looking. And so this is the year, if you go to any sort of Main Street hedge fund today, there's a guy in that hedge fund at least starting to think about cannabis. When we look at private deals now, they're coming to our office and they're not necessarily going to another cannabis fund. They're going to the Tiger Globals of the world, or kind of the most prominent hedge funds out there. I think it's all happening. It's going to happen as soon as we get a states out, for sure. And I can tell you on the banking side, every big Goldman, Morgan Stanley, they're all looking and they're waiting for the legislative backdrop to do this, because the fees are astronomical.
So with that, I'm afraid we do have to cut. I want to leave room for my friend John Najarian to come on here with a really interesting panel too. So look, thank you, Danny, Gene, Tahira, Sean. This has been a treat. Congratulations, Benji, for getting this dialogue.